What do you make of this exactly, Daniel? The trade conflict, and then, of course, the coalescing of the EU with China here, and ultimately also Donald Trump coming out and calling the EU a foe.
Well, I think, Trump has always been one to court controversy, so I don't think we should read too much into what he says and take it at face value. I think what's interesting is that we've experienced 7 decades nearly of continuous improvement in global trade relations, and that has obviously been accompanied by a similar improvement in global economic growth and macro conditions. And now we face the threat of that going into reverse. And the truth is we don't truly understand what the consequences will be. We do know that the first round impact of the trade tariffs so far are likely to be quite small, both in terms of the impact on growth, but also in terms of the impact on inflation. But what we don't understand fully are the consequences of the unravelling of things like global supply chains.
Exactly, and Donald Tusk has just been talking about there being still time to prevent conflict and chaos.
Well, I think it's natural that if you have a group of nations who believe that extending global trade linkages is good for their own economies and good for the global economy, then if you have an errant economy that is seeking to close trade links, that it's natural that the other economies and countries would seek to broaden their linkages.
Well, so one of the things which has to happen, Daniel, isn't it, that if you end these relationships and you put up tariffs, you're going to have inflation, aren't you? The price of these goods are going to go up, and that's not exactly going to be very popular, make Donald Trump very popular, is it, amongst probably his core group as well?
Yes, absolutely right. I think, as I said just now, the first round impact of that is likely to be small. It's probably only going to feed through into US CPI by the order of about 0.1%. But of course, there are some specific goods that it will impact much more directly. So we know that of the 200 or 300 billion of electronic goods that were consumed by US consumers last year, that a very high proportion were directly or indirectly imported from China. And so, of course, if you impose tariffs on such goods, then that's going to naturally feed through into higher inflation and higher costs, in part for the very voters that put Trump in power in the first place.
If we look at the numbers, and I think you did some research on this, we're looking at $375 billion of a trade deficit. That's according to the US.
Yes.
The Chinese have a figure of 100 billion less than that. Then, on top of that, you can add things like, if you look at it on a value-added basis, this is what you've done here as well. But one thing you didn't add here is the services component, because we're just looking at goods here. But if you add services, you could argue that it's possible that the United States is running a trade surplus with China.
I think it was Disraeli who said there's lies, down lies and statistics, and this is a very good example of that. So as the US counts the trade deficit with China, it's about 375 billion. China counts its trade surplus with the US at about 100 billion less, and it's been quite consistent in terms of that gap for some time. And there's a few reasons for this. One is that there are a number of goods that pass from China through third countries, and depending
or Hong Kong even.
Well, indeed, about half of the gap is from Hong Kong, and of the rest of it, about half goes through other countries, so that makes a significant difference. And then there's also the issue of some goods are resold in transit. So when they leave China, they then suffer or experience a change of valuation and a change in ownership. So the value of exports leaving China is different to the value of imports going into the US. So it's some very interesting statistical anomalies.
As you said, the Disraeli quote. That brings us on nicely to the point which is what it's really about, and that's America's hegemonic status.
Correct. I think, the analogy with the UK after the Second World War is not out of place here, and it's natural in some respects that when you see an economy that's at full maturity, both in terms of its economic status but also its political status, that it tries to fight against the natural demise. And obviously, with China growing so rapidly and it being such a large country, I think it's inevitable that at some point the Chinese economy will, in all terms, be the largest in the world. And so it's natural that we would expect to see some tension there.